So without much further ado, I would like to introduce to you our very highly valued keynote speaker, custodian from Brazil. Eduardo Carlos Ferreira is the CEO of Microinvest, which is a micro-enterprise credit society in Sao Paulo, and is owned by Itaú Unibanco and the IFC. He would like to show you a short video, and please give a warm welcome to Eduardo.
So, first of all, I'd like to thank you very much for LSE, Judith, and all the organization of this conference for this invitation. It's a great pleasure and honor to be here to share some experience that we have in Brazil. When we decided to build a microfinance operation, the decision, technology, or the traditional microfinance methodology was a great dilemma for us. In the next few minutes, I'll try to show you how we handle, how we manage with this problem. And this presentation is about, usually microfinance talk about rural experience, and our experience in Brazil is related to shanty towns, to urban areas. So you're gonna see how we managing this thing. So, Itaú, just some information about Itaú. Itaú is the largest bank in Latin America, and is one of the 15 largest banks in the world. The brand Itaú is the most valuable brand in Brazil, and it's an honor to say that Itaú Unibanco was recognized for the second year as the most sustainable financial institution in emerging markets in Latin America, in the Financial Times Sustainable Banking Awards. So we are very proud for that. We have international presence. We have a retail operation in Argentina, Chile, Paraguay, Uruguay, and we have many offices in many countries around the world, many in Europe and Asia. And for us, sustainability means ensuring the sustainable performance of our business, and we choose 8 teams to handle with sustainability, and microfinance and financial education is 2 of those. So microfinance for us is very important. So microfinance at Itaú Unibanco, we have 2 different operations. One is related to credit cards and consumer finance, and we have many credit cards. Only in one of our brands is Hipercard. We have 12 million of plastics, mainly for low-income people, and many of those with micro-entrepreneurs. For us, this is microfinance, but it's not what I'll talk about. We have 2 other operations. One is what we call second level, is when we provide assistance to social organizations, and we provide funding, technical assistance, and all this stuff. And we have another operation that we call first level, is Microinvest, is the operation that I am the general manager. When we provide financial service directly to our clients, our customers. And Microinvest is, in fact, a company. It's a subsidiary of Itaú Unibanco. The shareholders are Itaú Unibanco and IFC, World Bank, with a minority share. Microinvest is a formal, for-profit financial company regulated by central bank. And in Brazil, we have a special category, a special legal entity we call SCMs, and SCMs are not permitted to mobilize deposits. However, we can fund ourselves through other financial institutions, domestically and internationally, and we can do what we call correspondent bank. I don't know if you are familiar with that. This is not very popular here in Europe. Is when we do financial service. We provide financial service through stores, drug stores, and restaurants. You can do business with them. Just to complement, Brazil is a big country. We have 190 million inhabitants. 84% live in urban areas, and only in São Paulo and Rio de Janeiro, two cities, 32 million people. It's a lot. And almost all of us have access to technology. We have the same number of cellular phones and inhabitants, and we have like 600 million credit cards in Brazil. Not only credit cards, debit and credit cards in Brazil. So even the low-income people, they have contact with technology and financial service. So why microcredit? For a bank like us, microcredit is a huge business opportunity. We have 12 million micro-entrepreneurs in Brazil that employ over 15 million people. So it's a large business opportunity. And this product improves a lot of social impact. So I'll show, this is one case. This is Cida. Cida lives in a favela in São Paulo. We call favela for change house. In only 2 years, she multiplied by 3 her income. And we're gonna see a short movie with a little more stories of success. Just a second.
Ela tinha uma pequena mercearia e o primeiro crédito dela foi R$300. E no decorrer dos créditos ela foi aumentando, ela montou um mini mercado. E com esses valores maiores ela pôde crescer o seu empreendimento. Crescendo o seu empreendimento, ela pôde dar emprego para pessoas da comunidade.
Eu sempre trabalhei para os outros, né? Assim, eu era diarista, eu não tinha conta em banco, eu não tinha nenhum tipo de conta. Então isso foi difícil, né? O microcrédito ajudou a fazer compra e foi até o nós chegamos hoje. Rodrigues, proprietário de um restaurante brasileirinha, tinha só um buffet, era bem pequenininho, agora ele já serve uma quantidade maior de clientes.
Eu tenho um restaurante dentro da favela do Heliópolis, aqui era pequenininho, cabia 2 mesinhas só e 2 geladeiras. Aí com a ajuda do microcrédito eu consegui ampliar tudo e comprar, e com o empréstimo que eles me fizeram, eu cheguei até lá. E quero ir mais para frente, né? O que eu tenho que fazer com um banco desse? Agradecer, não é?
Quando você vê que ela começou lavando cabelo no tanque, e atendendo de porta em porta, e fazendo unha, vai trabalhar na sala da casa, depois ela monta um outro salão, gera emprego.
No começo é difícil, mas eu sempre tive fé que eu ia chegar, ia montar um salão, era o meu sonho, né? Me sinto segura, se eu precisar de alguma coisa, eu conto com eles. Eu consegui tudo isso graças ao meu trabalho e eles também, né? Eles me ajudam muito. E estão me ajudando ainda, então eu pretendo crescer muito através deles.
E o que me deixa mais feliz nesse trabalho é ver a mudança das pessoas, ver o sonho dela ser realizado. Não passamos fome porque a gente vendia pão. Eu precisava e muita gente precisa ainda. É uma orientadora. Eu não tinha nenhuma noção de montar assim, uma mercearia, essas coisas. Uma das coisas que eu sempre queria que alguém fizesse é que confiasse em mim. Eu fui crescendo. Aí acabei pagando aluguel, depois comprei o prédio, da outra parte.
Você começa a entender da história desse cliente. E é por isso que talvez a gente faça com tanta eficiência, com tanta dedicação. Não é só simplesmente o cliente, é um empreendedor, é uma pessoa que investe, quer ter um crescimento positivo.
Para mim é muito importante a participação deles também. Eles estão me ajudando bastante.
Se não fosse o microcrédito, seria diferente.
Hoje não tem coisa melhor. Para você ampliar na vida, não tem outra coisa melhor.
So let's see how we improve technology to our operation. So one of the microfinance key innovation was the introduction of law officer, but the law officer is too a barrier to scale up this operation. We need a lot of law officers. It's very hard to find them and to capacitate them. So the critical question is how to optimize the law officer management to reach hundreds of thousands of clients. And we, in Brazil, scoring, they are a very good tool to low-cost credit, and they became available on a massive scale in our country. The consumer credit is widely available, but microcredit remains a drop in the bucket of the potential demand. Why? Because it's very tough to provide a law officer in a scale. So we decided to blend the two approaches, the scoring with the high-touch model of the traditional microcredit. So we have a decision model like this. We decide to use 3 levels: the transaction level, the micro-enterprise risk level, and the micro-entrepreneur risk. If we have high risk in this, we use the traditional microfinance level. If we have low risk, we blend the traditional with scoring. I'll show in a second how we do this. Another decision is to use a different modeling approach. We use multi-level model to modeling our clients. This kind of techniques is originally developed by modeling education. In education, the performance of students is based on a combination of factors: is their own abilities, their class or teacher, and their school. So we share it 3 different levels. We made a parallel with microfinance, and we analyzed the business sector level, the individual level, and the transaction level. The business sector means, for example, groceries are different than drugstore, and we combine the risk. The individual level, marital status, age, and all that stuff. And the transaction level is the amount, and is the first time that we have a relationship with that client or not. And we have a combination of levels, and we have a decision model based on that. Another technique that we use is geomarketing. We're going to show an example. Without the geomarketing tools, we have this distribution with clients and our law officers. You can see that, it's not very organized. And we developed this tool, and now it's the new distribution. And with that, we decided to work in small regions, and here we have the results. In average, the distance between the customer and the law officer drops 33%. This is meters, it's not here, it's like 4 miles to 1.5 miles or something. So this is when we receive a new application, we send to the right law officer. And the hybrid model works like this. When we receive an application, we run a pre-visit model, and we deny 24% of the applications and approve automatically 15% of those. If the application is referral, there is a visit, and after that we run a second score, is a post-visit model, and we approve it again 12%, and 12% is denied. And the third level of decision is the credit committee, when we approve 25% and deny 12%. So with this model, we have only 37% of the applications with the whole process, and we decrease the number of visits in 37%. So it's talking about costs, it's a lot. And finally, the operation is paperless. We have a workflow system. All the documentation, we take pictures of the documents and send to a back office. And in the back office, we have a profile of the clients, and they support the credit decision. The workflow system managing the time that we take to the credit analysis, and is a very helpful tool. And as you see, all the law officers have BlackBerries, so we have a branchless operation. They are in the field. I mean, the connections are on the BlackBerries. And our challenges for the future is the economy of scale. We need a lot more clients. Economy of skills. We need to understand the mindset and market innovation. We need to develop and find innovative ways to market our new and existing products. And to finish, just a second, I'll show you a very short video. No, this one.
Na maioria das vezes, os agentes de crédito fazem parte da comunidade. Então, todos os agentes de crédito se sentem importantes dentro das comunidades que eles atuam. A gente está levando crédito às pessoas da comunidade, a gente está ajudando a desenvolver as pequenas atividades comerciais.
Precisa de determinação, brilho nos olhos, vontade de vencer e vontade de ajudar os clientes a crescer.
Muitas vezes fazemos orçamento junto com o cliente para ele ver aquilo mesmo que ele quer, fazemos pesquisa com ele, muitas vezes vamos na lan house com o cliente.
A gente costuma dizer que o agente de crédito ele é um consultor de pequenos negócios, porque ele chega na comunidade, ele dá o primeiro crédito para o cliente, depois de um tempo ele volta, dá outro crédito, então ele acompanha o crescimento, o desenvolvimento daquela pequena atividade.
Porque muitas vezes o cara tem uma ideia legal, tem um ponto legal, tudo, mas ele não tem noção de contabilidade, administração, fluxo de caixa. E a gente chega com essa orientação e possibilita que ele cresça e tenha mais rentabilidade.
O que ele pode melhorar, onde ele pode mexer, como ele pode aumentar a sua renda, aumentar a sua receita, gerar empregos.
A gente leva até ele o boleto, especifica as datas de pagamento, ali a gente reforça o compromisso do pagamento e ele paga com caneta, em qualquer correspondente bancário. Lotérica, farmácia, supermercado, na comunidade tem muito.
O cliente aí, quando ele vê o crachá da instituição, traz segurança.
E ter um banco, uma estrutura forte, dando garantia para a gente cumprir essa missão, é muito valoroso, é muito importante.
Os nossos cartões de visita têm o site do microcrédito e eles vivem falando pra gente que eles acessam para procurar mais informações.
O agente de crédito muitas vezes na comunidade não tinha uma máquina de fax, não tinha um lugar para mandar e-mail. E o BlackBerry faz tudo isso de bolso. Ele tira foto, ele manda e-mail, ele recebe e-mail, a gente recebe o aviso de crédito aprovado ou não aprovado. E como a gente está perto do cliente, as relações são rápidas.
Tem as assistentes lá na central e elas estão dando suporte para nós aqui que estamos na rua, né?
Se o cliente, por exemplo, vai fazer uma reforma, eu procuro fotografar o antes e o depois, até para ter certeza de que o investimento foi feito.
O fato do agente de crédito estar sempre focado dentro da comunidade, a nossa taxa de inadimplência é muito pequena, mas quando ela acontece, ele tem a oportunidade de entender qual é o motivo e junto com o empreendedor ajudar a resolver o problema.
Uma inadimplência bem baixa. Isso vem pelo relacionamento que nós temos com nossos clientes. A gente, por exemplo, temos área geográfica. Cada agente ele fica na área geográfica. Por quê? Ele sempre passa ali, perto do José, com que o cliente esqueça da gente.
Thank you very much for your attention.
First of all, thank you very much to the organizers for inviting me. And as to this panel, the panel is on the commercialization of microfinance, if it is beneficial or detrimental to the poor. And what can be said without any doubt is that this is a really burning issue at the moment in the microfinance sector, and I think the organizers really had their fingers on the pulse when choosing this topic. And what we can't promise you now is that at the end of this session you will really have a clear answer on this, or that we come to a conclusion. But what we certainly can promise you is that you will get some good food for further thought. In fact, as you certainly know when you are a little bit interested in microfinance, is that in the last year the rift between MFIs, microfinance institutions, who have turned to commercializations, and MFIs who want to keep a more altruistic approach by remaining non-profit institutions, has further widened a lot, because as you may know, in 2010 there was the IPO of SKS, the largest Indian MFI with more than 5 million clients. And this came for some in the microfinance sector as a sort of shock. It was not the first one. There was one, I think, in 2007, when Compartamos also made an IPO. But what can be said is that it is really a big step, because from the origins now that there are shareholders who want to have a return on their investment, is really a big change to the origins of microfinance. I had a look in the dictionary, and according to the dictionary, commercialization is the process of or cycle of introducing a new product into the market. Okay, that's a very nice definition, and it can be argued that microfinance practitioners worldwide promised exactly that: introducing new and adapted financial products to serve poor people, generally excluded from the financial system. So consequently, the more advanced the commercialization, the better for the poor. So is now everything all right? Everybody happy? No, of course, because this process of commercialization has raised many concerns when evaluating the profit, the actual benefits for the poor. And on one hand, you have many calls for microfinance not to profit off the backs of the poor. On the other hand, you have many voices saying that microfinance can't scale up from 100 million clients today to 3-4 billion clients without capital markets. And we'll hear much more about this later. And without the formality capital markets requirement. The most important question is whether commercialization, and I would, as a non-academic, I would define it as in microfinance as the entry of investors whose primary motive is financial rather than social, if it's really good for the poor. And here the least what can be said is that even the most prominent figures of microfinance have very divergent and very strong opinions about it. And the most prominent figure is certainly Mohamed Yunus, and he says for him it's, I quote, immoral to make money off the poor. Only kinds of investors needed in microfinance are ones who are willing to accept very limited profits for the sake of keeping as much money as possible in the pockets of the borrowers. And then more, I would say, aggressive, in Financial Times 2 years ago, he said, when you are making profits, you are moving into the mentality of the loan shark. And Mr. Yunus went on today, we are trying to get the loan shark out. And about overseas investors, he said that overseas investors only serve to introduce foreign exchange risk and should stay out of the sector. So very strong statements. And I'm sure that, for example, Fritz Bernhard on my left will not agree with this. Because in the other corner of the ring you have good arguments too. And we'll hear about it later, but just to take two, is that we can't meet the worldwide demand for poor people's financial services unless we can grow in private and profit-oriented capital. And the competition can be counted on to bring interest rates down. Could also be a very good argument. But then how much commercialization is good for the sector? And there I have a last quote of Sam Daly-Harris, who is the head of the Global Microcredit Summit, and who is, I would say, close to Mohamed Yunus, and he says, if we go too far down that road in commercialization, there will be a day where you and I and others will be ashamed that we are in microfinance. So my question now is, what at the end of the day is in for the poor? And they should, of course, always be the center of our reflection. Where are the limits of microfinance? How far can microfinance go without bearing the risk of putting us in the situation of being ashamed, as he said, that we are part of this business. So there are some thoughts on this issue, and now I invite Marek Poudon to take the floor. He will set a little bit the scene of our panel. Marek is a professor at the Sorbonne Brussels School of Economics and Management at the Free University of Brussels, and has conducted research among other countries in India, Mali, Morocco, and the Democratic Republic of Congo. His special research interests are ethics and public policy issues in microfinance. And he's also the co-director of the CERMI. CERMI, I don't know if you know CERMI, it's the European Center of Research in Microfinance. By the way, a member of the European Microfinance Platform. And it's one of the leading research centers on microfinance in Europe. And they also propose a master in microfinance, which is very popular among microfinance employers, I would say. And 2 years ago, they co-organized with the European Microfinance Platform the first ever research conference on microfinance, which was a huge success. And there will be a second one this year in June in Groningen, with Groningen University. Marek.
Thank you, Christoph. Thanks for the invitation. It's great to be here. Thanks for the organization. I think it's a wonderful event, and congratulations for organizing it. I mean, I think you managed to have a lot of very interesting presentations. At least the titles looks already nice, and I think to have a large group on this topic is already great. So congratulations for this, really. I've been asked to set the stage on this very difficult and cumbersome question of commercialization in the microfinance sector. So, being an academic, I'll try to set this stage inside a little bit what we know also in the literature, of course, and maybe take a look back a little bit about the history, as we could call it, of microfinance, trying to understand what happened, in fact. I mean, Christoph explained us already a lot of things, but this might be interesting to have a kind of step back to understand what's going on today in microfinance. So, at the end, if you have to read the first paper, as we say, to our master students in microfinance, it's probably the microfinance promise, which explains you a little bit what is the promise of microfinance. And in this paper by Jonathan Murdoch, he explains that microfinance has been successful to attract a lot of attention from different people. People are interested in bottom-up approach, this kind of new methodology where it comes from the bottom. People from the field having this approach. Microfinance is working with the underserved, financially excluded people also. And microfinance is working, at least was working almost primarily with group lending. And then it could generate some social capital as such. But on the other hand, also it has attracted attention from other people with other interests. Because somewhere we are talking about entrepreneurs here. And micro-entrepreneurs, new enterprises also. And we are talking about sustainable institutions, not primarily like credit-led institution or credit-led program, as we could call them before, which are somewhere related to what we could call the market forces also, since these institutions are working a little bit with subsidies, but some of them have managed to be sustainable as such. And these people also, there was, I mean, certainly when microfinance started, kind of a suspicion against subsidies in microfinance and subsidies in general. And microfinance was a way also to develop new ways to tackle issues related to poverty with, let's say, less dependence on subsidies. Of course, there's still some dependence, but less at least. What is interesting is around the same time, and Jonathan Murdoch, the same guy, published another article which explained that, in fact, behind this kind of consensus behind microfinance, there is still what he called kind of a schism in the sector. And he explained that there are different visions inside the same microfinance sector about what is microfinance, how can microfinance be analyzed, how can microfinance be done, managed, and so on. And he set the stage, and Gary Waller also published another article on this issue, explaining that what they call, in fact, two camps in microfinance. And This is again 10 years ago, so this might look a little bit old-fashioned today to most practitioners, to most people, but I think it's interesting to understand what's going on today. He explained that there are people primarily interested in the depth of outreach, reaching very poor people, and people thinking that what you need for institution is to cover the cost of the institution mostly, what we call operational self-sufficiency. And if you want to do and to have some impact related to that, you need what we call microfinance plus activities, some business development services next to credit, and that these business development services would be a way, for instance, to empower the clients and to have some social impact. And that's what he called, or they called, I guess both of them, the welfareists. On the other hand, on the other side, there are people primarily interested in building sustainable institutions as such. So the primary focus here is on institutions more than clients. Of course, these are extreme cases, and you can imagine that already 10 years ago, a lot of people were in between, but these are just some frameworks to understand a little bit the different thinking related to microfinance. But these people were interested in financial deepening. That means like including the people in the financial sector as such. Their main target was not only to cover costs, but also to go a little bit further. This means to have what we call in the sector financial self-sufficiency, financial sustainability. So the difference is when you remove the subsidies, the cost of inflation, and so on, when you make some adjustments. So these institutions must be able to survive even without subsidies. And what do we need to get this kind of institution? We need to have some large-scale, profit-oriented institution, and that's the kind of institution that they favor. So what's interesting from this is that, okay, what they explained at the end of the article and 2 or 3 years later when you read the interview from these people is that little by little this sustainability agenda has taken more power, for instance. It's become more and more powerful, certainly in the sector. We've been talking about sustainability more and more. Why? Because most institutions at this time were certainly not sustainable. Still today, a lot of microfinance institutions, the majority probably are not sustainable. As such, they couldn't survive without subsidies. So you have a bunch of institutions that are very sustainable, very profitable, but you have a lot of them which are still not sustainable. But so at this time, there was this push to sustainability, and commercialization, to link with the topic of today, was seen as a way to reach this goal in a context where we know, and it's still the case, of course, today, that subsidies are limited, that you're not able to subsidize all institutions and subsidize all clients, because we've been talking about more than 2 billion clients without access to financial services, and if you have to do that with subsidies as such, it may be very difficult, if not impossible. So commercialization was analyzed as a way to reach that. And the ethical justification, since I'm also working in ethics, I think it's something interesting, or the legitimacy at least of this way, was related to the scale. I mean, first we're talking about people financially excluded, and second we're talking about reaching these people pretty rapidly. When you have sustainable institutions, large-scale institutions, then you are able to reach them pretty rapidly, at least that's the argument. And then you're reaching a lot of people, and that's and you do that rapidly. So that's how the sector evolved a little bit after these years, the early 20s, let's say, at this stage. And then came what Christophe just explained us, these big clashes. The first one with the clash on compartamos. You have this article in the Business Week explaining that this is the ugly side of micro-lending. All big microfinance banks profit as many poor borrowers get trapped in a maze of debts. So the IPOs or compartamos, and more recently the IPO, where you have this article on Reuters that this profit could be related to poverty, and that it could therefore have this bad behavior related to poor clients as such. So there comes the clash, of course, is that this has come a little bit later. Of course, these are the two very large institutions. IPOs are still exceptions in microfinance. You don't have so many IPOs in the sector. But then comes this clash. So how could we then take some lessons from what happened and try to some way give some indications? I'll not be able to answer fully, and there are other people which will help us to get to this, but at least what are my ideas related to this 10 years later, after the microfinance schism, or microfinance promise. I guess that there's certainly more consensus on the term commercialization, or I would understand it as a way of pushing the institution to be more commercially oriented as such, if it entails efficiency in mission fulfillment. This is a new paradigm somewhere in microfinance also related. There is a very nice book of Balkanol working at the ILO on these issues that, okay, what is important is not to compare apple and pears, is to be efficient in the kind of compared to the kind of institution in the same environment. So you cannot compare institution in the rural area with institution in the urban areas. You have to compare institution working or let's say active in the same area. So if this commercialization entails this efficiency, then okay, there's probably a kind of a consensus, or let's say more of a lot of consensus on the issues that anyway, even if they are subsidized, what is important is that they do their job correctly. There's probably less consensus if commercialization entails or is related to kind of a logic of surplus. Surplus is the notion used in that's what I found yesterday in a meeting with some British scholars from Oxford and Open University, that this is the term used in the social enterprise literature to define some way social enterprise in UK. That's what explained me. And this, if this is related, if commercialization is related to this question of extracting surplus or just getting value from poor, or more value from the poor, and taking it for the institution, if not for the shareholders, then probably this means that you would have less consensus on this issue. My second point would be related to the debate or the trade-off, and I put a question mark related to that, but the trade-off between these financial and social indicators. On one hand, we have a bunch of financial indicators, we know them, we understand them, return on equity, OSS, FSS, all these issues. We still have some debate, even if we have had a lot of very nice papers on this issue, a lot of work. People like Anton have been very active on these issues with the Impact Network, and but still, I mean, it's not always clear when you read the latest publication from the MIX or the CGAP on these issues which are exactly the social indicators that we will follow. And in the academic literature, there is still a debate if there is a trade-off or not. Some people are finding no debate, no trade-off when they take a bunch of indicators of social performance, but we find some trade-off when we take, for instance, the size of the loan. So there is at least a trade-off when you give some small loans, you are less likely to be sustainable or financially sustainable. So that's a question, and it's of course more questioning when we know that it's very difficult for donors and socially responsible investors to balance that. And some people have then said that when you on one hand you have financial indicators well understood, and on the other hand you have social indicators that are still debated and where you have less consensus, some way the weight is not exactly the same, and then you're taking the financial indicator as baseline, and the social indicators could be some pluses or some additional elements. Then what is interesting and is also is sometimes to again take a step back and trying to think more globally. Microfinance institutions are just one example of hybrid institutions. We are not the sole one. There are a lot of different examples of institutions with a double bottom line of financial, social indicators, if not triple bottom line with the environmental. And there's actually a very recent paper by Batilana and Dorado in the Academy of Management explaining that, in fact, this kind of institution face what we call the typical problem between two different logics, the developmental and the banking logics. I think it's interesting for microfinance today is that two main elements in this kind of institution, and even more when they transform. So they are studying transform institutions that were NGOs and that become for-profit institutions. Two key elements are the hiring and the socialization policy. So that's what they found out in the elements. So in this kind of institutions, these are important elements. Finally, last point is that probably when I was taking the train this morning, I was thinking again about this question. I was thinking maybe there was kind of an underestimation, at least by some actors, and probably the one that were not directly totally in favor of commercialization. There was this, they underestimated that integration with international financial markets also means integration with the expectation and the functioning of these international markets. That means that, okay, when we try to link macro institution with international finance market, and of course I'm talking about IPOs, and that means also working with people with certain level of expectation. We know the profit expectation, the return on equity expectation and such. And in some way that was, even if most people already knew that there was this element, they somewhere underestimated the impact that it would have on the microfinance sector, and the fact that it has maybe changed the face of the microfinance sector as such.
Thank you very much, Marek, and we will immediately go to Christopher Bernard. He's an independent legal consultant with a specialty in microfinance. Previously, he was a partner at Allen Overy, and there he was one of the founders of the firm's microfinance working group, which now consists of more than 250 lawyers around the world. And by the way, they are also now a member of the European Microfinance Platform. And he will give us now a capital markets perspective. So, Chris?
Thank you very much. My sort of entree into microfinance was through the capital markets. I was a securitization lawyer and worked on one of the first securitizations of loans to microfinance institutions arranged by Blue Orchard several years ago. And now doing consulting work, and with a focus on microfinance, but being neither an academic nor an MFI practitioner, I thought really my perspective from the capital markets would be the most appropriate thing to focus on. Just to start with some quotes that kind of frame the discussion. The first one is actually the title of an article by Milton Friedman back in 1970, which is The Social Responsibility of Businesses to Increase Its Profits. More recently, in 2002, in the book The Fortune at the Bottom of the Pyramid, this idea was put forward that actually making you're finding the market at the bottom of the pyramid for companies is actually not consistent with that responsibility of increasing profits, and can actually be good for people at the bottom of the pyramid. As Christophe pointed out earlier, Muhammad Yunus has repeatedly expressed an alternative view, and then more recently. Actually, that was a recent quote I gave of his, but in December, the Prime Minister of Bangladesh, of course, then criticized Yunus as being a bloodsucker, even though Yunus is anti sort of commercialization. And very, very recently, for those of you who don't know, Yunus has actually been removed by the government of Bangladesh as head of Grameen. So it's a very, very complicated topic with lots of issues. Why capital markets? Why are capital markets an appropriate way of funding microfinance? Well, certainly the arguments that have been forward in the past, and which I think for the most part are still relevant today, is that first of all, just the traditional ways of funding microfinance through government funding and charitable funding has limitations in terms of scope and in terms of efficiency. And when governments, especially when governments see that there are sustainable ways of commercial ways of funding microfinance, they may feel that their resources are better allocated elsewhere. Commercial bank funding and another commercial source of funding, where it's available, it's not always available to microfinance institutions, and where it is, it's often very expensive and typically short term. The MFIs need debt as well as equity. So I should say equity as well as debt, and not all MFIs are authorized to take deposits. In some jurisdictions, no MFIs are actually authorized to take deposits. In terms of international versus domestic capital markets, domestic capital markets can be very undeveloped, whereas international capital markets are a more developed source of funding. And just also the capital markets are just vast. As of 2006, one estimate I saw was put the size of the worldwide capital markets at $65 trillion. And the demand for microfinance is also huge. Right now, I think the estimates of the microfinance market is between, or microcredit I should say, is between 20 and $60 billion, reaching about 150 million people. Whereas that's the actual market. The demand, well, more than 2.7 billion people around the world still don't have access to formal financial services. And the demand has been estimated, for microcredit, has been estimated at about $275 billion. So as you can see, the demand far exceeds the current developed market. Some may take issue about whether that's actually a realistic figure and whether there really are, all those people who don't have access to formal financial services really need microloans. But I think there is a consensus that the demand for microfinance currently is not met, and it's huge. In terms of the capital markets, types of capital markets funding, I'm talking about, traditionally, it's, as I said, split between debt and equity. Debt can take the form of bond issues, collateralized debt obligations, similar to what I did with Blue Orchard, or securitizations of actual microloans. This is done in BRAC in Bangladesh. Equity, it was mentioned earlier, the Compartamos and SKS experiences with private equity and initial public offerings. Again, very, very controversial. It's currently estimated that since 2006, investors alone have put $515 million into private equity in Indian microfinance companies. And one of the reasons for that, the reason put forward by the CEO of SKS, is just that Indian microfinance companies are not authorized to take deposits and have really no other way of accessing the equity that they need except through the capital markets. Microfinance investment vehicles are essentially funds put together for investors. This could be the next panel. We'll talk about MIVs in more detail. Whereas there is some local currency funding, typically on the international capital markets, the funding is in dollars or euro or other international currencies. This just, again, gives you a quick idea of the sort of breakdown of capital markets instruments. Mostly debt. Equity is growing, and then also at the bottom of that chart, another form that these investments can take, or instruments can take, is in terms of guarantees or letters of credit for MFIs. So who invests through the capital markets in microfinance? Well, there are traditional investors, such as NGOs, not necessarily through the capital markets, but certainly in microfinance, NGOs. In capital markets instruments, definitely government development agencies and financial institutions will invest, often taking sort of the riskier or equity slice, say, in a tranche CEO. And then philanthropists in terms of foundations or high net worth individuals. And then there's the spectrum of investors in terms of motivation really ranges from purely socially motivated investors, and again looking at foundations would be typical of those, to profit motivated investors, investors who see microfinance purely as a way of making a market level profit without any focus at all on the sort of social impact. And then there's those in the middle who are typically referred to as sort of double bottom line investors. We're looking to achieve not only a financial return, but a social return from their investments. And this, again, gives you a sort of an idea of the who is actually investing in microfinance institutions through the capital markets. A real focus on private institutional investors. Retail investors are a very, very small part of the capital markets. These are typically private deals. One way of really unlocking the capital markets would be to start having sort of public deals open to retail investors, like you and me, but we haven't gotten there yet. So why are investors attracted to microfinance? So I mentioned already it offers attractive returns, but also offers social impact. There's this concept of doing well by doing good, making a market return or below market return, but making a return while at the same time achieving a social impact. Traditionally, microfinance also had very low default rates and was perceived as insulated from the larger macroeconomic issues within their countries, because microfinance is seen as really being below the radar of the larger macroeconomic events. It's also been seen as a good way for investors just to diversify their portfolios, another asset class in which investors can invest. And then there's other motivations, such as in some jurisdictions, investors will actually get a tax incentive to invest in microfinance, sort of indirect subsidy. That was sort of the promise of the capital markets as put forward when I got involved several years ago. Microfinance has actually seen its own sort of credit crisis over the last few years, which was caused by a number of factors. One was just that the enthusiasm around microfinance with the Euros microcredit and Eunice getting the Nobel Prize, etc. A lot of people got very enthusiastic about microfinance. A lot of capital was pushed into the sector, mostly debt, too quickly, and microfinance institutions grew too rapidly, became over leveraged, and also the capital markets really were talking about a very, even though the market and industry for microfinance is huge, the capital markets typically only focus on a small sliver at the top of the most sophisticated MFIs. So these MFIs were really inundated with a lot of capital. In trying to grow, to meet their demands from investors for returns, MFIs grew too quickly and began to sort of lose sight of their mission and other standards in terms of risk management, credit management, etc. And then when the global financial crisis hit, all of a sudden the capital markets, there was not a lot of liquidity out there. Some of the credit started getting withdrawn. Funding declined, became much more expensive than it had been, and MFIs really faced their own little credit crunch. Another thing to point out is that also a lot, because of the amount of these investments that are in international currencies, MFIs became very exposed to currency exchange rates. So as you can see, as a result, this is looking again at the MIV market. Asset growth plummeted. I mean, it's still growing, but at a much lower rate than it had been back in the mid 2000s. So the MFIs are really sort of under a lot of pressure. Their portfolio growth slowed. There were concerns about that leading to increasing borrower default, because one of the economics of microfinance is, with the way they operate, borrowers will take out loans and repay those loans largely on the basis that they will get a follow-on loan. And when MFIs start saying to borrowers we're not going to be able to or willing to provide another loan, borrowers' repayments can sort of start drying up. So with the access to funding decreasing, MFIs really had to reorganize, restructure, slow their growth. There were some defaults, some debt restructuring. Actually, KfW and the World Bank put together this microfinance enhancement facility, which was basically a liquidity facility for microfinance institutions to help them weather the storm. It was a $500 million facility, but only I think 12 million were drawn. So, in fact, MFIs actually weathered the storm quite well, and we're now seeing MFIs kind of coming out of the financial crisis as an industry largely intact. It's interesting looking at at the banana skins report, which is this report that's done every year on what the biggest risks are to microfinance. And I think it was in 2007, I believe. The biggest risk was too much liquidity. Then subsequently, the biggest risk was too little liquidity, and now funding has dropped in terms of too much and too little has dropped to the bottom of the chart in terms of risks. And the biggest risks now are really seen as reputational risk and political risk, as the focus turns to these issues of profitability and whether microfinance is really achieving the social impact. But I think we are seeing through the capital markets investors an increased focus on things like environmental, social, and governance issues. There's been a lot of talk recently about consumer protection issues, principles, and social performance indicators being adopted by investors as criteria for investment in microfinance institutions. And I think that's a very healthy thing. My view, and I apologize, I'm running too close to time here, but my view is that the basic argument for capital markets funding of microfinance still is there. The argument for commercialization of microfinance in terms of increasing its efficiency and enabling it to better deliver its services to poor people and expand its outreach, that is still there. But the issues that have been presented in terms of excess profitability, profiteering at the expense of the poor, those are real issues. And I think there's been a lot of soul searching going on within the industry that's been very, very helpful. And I think that actually the capital markets can be a useful way of bringing these issues to the fore, enforcing these on MFIs through making them actually criteria for their investment. I think at the end of the day, there's been a lot of talk recently about impact investing as another asset class. And I think the way forward for capital markets financing of microfinance is really focusing on the double bottom line, but not losing sight of either of the two prongs of it. So focusing on, yes, getting a return, because you can get a return that will increase the investment, but also at the same time not losing sight of the impact and the social mission, because otherwise